Good morning, everyone. Today, we're diving into the story of a company that has fundamentally reshaped computing, not just once, but twice. We're talking about Nvidia. Our journey today will trace the history of Nvidia, from gaming graphics to the AI revolution. We'll explore how this company evolved from a niche player in the gaming market to become the undisputed engine powering the global AI boom. Our story begins in 1993. Like many Silicon Valley legends, it started in a humble setting, a Denny's diner. Here, the three founders, Jensen Huang, Chris Malachowski, and Curtis Priam, met with a bold vision to bring 3D graphics, a technology then reserved for high-end workstations, directly to the consumer market. After a modest start with their first product, the NV1, NVIDIA's first major breakthrough came in 1997. The Riva 128 was a massive hit. By shipping 1 million units in its first 4 months, it put NVIDIA on the map as a serious competitor in the fast-growing graphics market. Just 2 years later, in 1999, NVIDIA didn't just release a new product, they defined a new category. They released the GeForce 256 and marketed it as the world's first GPU, or Graphics Processing Unit. This single chip integrated transform and lighting, which revolutionized real-time 3D graphics. This landmark year also saw NVIDIA hold its successful IPO. This next step is arguably the most important in NVIDIA's history. In 2006, they released CUDA, which stands for Compute Unified Device Architecture. This wasn't a piece of hardware, it was a software platform. For the first time, developers could harness the massive parallel processing power of GPUs for general-purpose tasks, not just graphics. This single decision planted the seeds for the future AI revolution. Those seeds came to bloom in 1212, an event many call the AI Big Bang. A neural network named AlexNet, trained on just 2 NVIDIA gaming GPUs, won the prestigious ImageNet competition by a massive margin. This event proved the viability of using GPUs for deep learning and caused NVIDIA to pivot its focus, recognizing it was now at the center of a nascent AI industry. By 2018, the convergence of AI and gaming became explicit. The launch of the GeForce RTX series introduced 2 game-changing technologies: real-time ray tracing for photorealistic lighting, and DLSS, which cleverly uses AI to boost frame rates. This marked a new era where AI wasn't just a separate business, it was now enhancing the core gaming experience. Fast forward to 2022, NVIDIA announced the H100 GPU, based on its Hopper architecture. This chip was built from the ground up for massive-scale AI and high-performance computing. It quickly became the most sought-after and essential piece of hardware for training the large language models, or LLMs, that we all know today. And that brings us to the present. The explosion of generative AI, kicked off by models like ChatGPT, created an unprecedented, world-spanning demand for NVIDIA's data center GPUs. This demand caused NVIDIA's market capitalization to soar past $1 trillion, cementing it as a foundational company of the AI era. And, as the timeline notes, the story continues. NVIDIA didn't achieve this dominance alone. A core part of its strategy is a vast constellation of key partners, fueling innovation across nearly every industry. This ecosystem rests on 2 pillars. On the manufacturing side, foundry partners like TSMC and Samsung are responsible for the massive scale fabrication of NVIDIA's complex chip designs. On the infrastructure side, the world's largest cloud service providers, AWS, Microsoft Azure, Google Cloud, and Oracle, buy these chips in massive quantities to power the global AI infrastructure. In their traditional market, PC and laptop OEMs like Dell, HP, and Asus bring their GeForce graphics to gamers worldwide. And in the new AI frontier, they are the compute backbone for virtually every major AI research lab, including OpenAI, Meta, Google DeepMind, and Tesla. This partnership extends into the automotive industry, where they co-developed the brain for autonomous vehicles with brands like Mercedes-Benz and Volvo. And in the enterprise, companies like Dell and Cisco build the accelerated high-bandwidth data centers that enterprises need for their own private AI. So, how do all these pieces fit together? This slide introduces Nvidia's modern identity, a full-stack computing company, building the future across silicon, systems, software, and services. Nvidia's activities are diversified across 4 key markets, or pillars. As this chart clearly shows, while gaming was its foundation, the data center segment has emerged as the dominant force in the AI era. Professional visualization serves high-end creative and scientific professionals, and the automotive segment is building the brain for autonomous vehicles.
Let's take a deep dive into that engine room, the data center. Its monumental growth is driven primarily by the insatiable demand for AI and high-performance computing. This is followed by the supply to cloud providers and supported by high-speed networking solutions and increasingly enterprise software licensing.
This brings us to Nvidia's unbreakable moat. Their most powerful strategic asset isn't just the hardware, it's the deeply integrated software ecosystem. It all starts with CUDA, the foundational platform. This feeds into a vast suite of AI libraries that simplify development. This, in turn, fosters a massive, loyal, global community of developers who are invested in the ecosystem, creating a high barrier to entry for any competitor. These elements create a self-reinforcing flywheel. As the radar chart shows, 3 forces work together: aggressive R&D in next-gen chips, strategic partnerships with every major cloud provider, and the sticky software ecosystem. These 3 forces amplify each other, creating a cycle of innovation and market dominance. To summarize, Nvidia's core assets are its vast intellectual property and R&D, the powerful CUDA ecosystem, its human capital and visionary leadership, a dominant brand in both gaming and AI, deep supply chain and foundry relations, and the strong financial capital to fund it all. From this position of strength, Nvidia is doing more than just participating in the AI revolution. It is actively powering it, positioning itself as the engine for what many call the next industrial revolution. In the data center, their leadership is unmatched. Their GPUs are the industry standard, commanding the vast majority of the AI training market. Their value extends beyond silicon. They offer an integrated, full-stack solution that includes hardware, pre-built servers, high-speed networking, and all the essential CUDA and AI software libraries. In their foundational market, gaming, Nvidia continues to define the ultimate experience. As this chart shows, innovations like DLSS use AI to provide a massive performance uplift, especially when combined with demanding ray tracing effects in games like Cyberpunk 2077 and Starfield. Looking to the future, the Nvidia Drive platform is acting as the AI brain for the next generation of autonomous vehicles. As the market for autonomous systems is set for exponential growth, Nvidia has secured broad industry adoption from leading automakers like Mercedes-Benz, Volvo, and Jaguar Land Rover. Beyond commercial AI, Nvidia's technology is a critical tool for researchers, providing orders of magnitude speedups for complex scientific simulations. Furthermore, their Omniverse platform is enabling industries to create and simulate digital twins, physically accurate virtual replicas of real-world environments. A company this diverse can't have a one-size-fits-all approach. Let's look at how Nvidia manages its customer relationships, engaging everyone from core gamers to AI pioneers. For gamers, the relationship is about community engagement, building brand loyalty through social media, influencers, and community building. For the data center, it's a strategic partnership, a high-touch, dedicated relationship with major clients, supported by direct sales teams and premier events like GTC. For developers, the relationship is ecosystem building. By providing free tools, SDKs, and training, they build that software moat. For professional visualization, the key is reliability and certification. Creators and engineers need certified, stable hardware for critical applications, which Nvidia provides. In automotive, the relationship is one of deep co-development, involving long-term B2B contracts in joint R&D. Finally, for robotics, the strategy is platform enablement, empowering hobbyists and researchers with developer kits and simulation tools to build autonomous machines. Now, let's look at how these segments translate into Nvidia's engine, the visual breakdown of the customer segments driving the company's revenue. This chart visualizes Nvidia's business diversified across its four key segments. While gaming established its legacy, the data center has clearly emerged as the dominant financial force, powering the global AI revolution. First, gaming. This remains a cornerstone of the brand. The core value proposition for its primary customers, PC gamers and content creators, is a combination of best-in-class performance, AI features like DLSS, and stunning ray-traced visuals. Next, data center. This is Nvidia's largest and fastest-growing segment. As this chart shows, the demand for AI compute is diversifying. While cloud service providers remain the largest consumers, enterprises and AI startups are rapidly increasing their investment to build their own AI capability.
Third, professional visualization. This segment serves professionals who demand the highest fidelity. As the radar chart illustrates, different fields have different needs. Media and entertainment prioritizes real-time rendering, while manufacturing and design leans more heavily on simulation accuracy and reliability.
Finally, automotive and robotics. Here, Nvidia provides an end-to-end platform. It starts with the Nvidia Drive hardware, which enables core capabilities like self-driving and infotainment, ultimately powering autonomous machines for automakers and robotics companies. So how does Nvidia get all these products to such different customers? They leverage a complex, multi-layered channel ecosystem built on a powerful, two-pronged push and pull strategy to dominate the market. The push strategy is how Nvidia's hardware reaches every corner of the market. It's a structured ecosystem of partners, segmented to serve two primary audiences: consumers and enterprise. On the consumer side, Nvidia provides the GPU chip, which flows through add-in board partners and OEMs. As the donut chart shows, AIB partners are the primary channel. On the enterprise side, cloud service providers are the massive buyers, while a network of VARs and system integrators build custom solutions. The pull strategy is how Nvidia builds powerful brands and communities to create organic demand. This pull ensures that partners have eager customers waiting. They tailor this communication to three distinct audiences: engaging gamers, fostering developers, and reaching enterprise clients. The true genius is how these two strategies work in perfect synergy. The push channels supply the hardware into the market, while the pull marketing channels create powerful demand from end users. This creates a self-reinforcing cycle of demand and fulfillment that leads to market leadership. We've seen the revenue engine. Now let's deconstruct that engine to understand the tech giant's cost structure. The most important thing to understand is Nvidia's fabless model. They master the high-value design and intellectual property, but they outsource the capital-intensive physical manufacturing to specialized foundries like TSMC. The process is chip design, followed by wafer fabrication,
then assembly and packaging. This model defines their spending, which is split into two key areas. First, cost of revenue, so-called COGS, the direct costs of making products. Second, operating expenses, so-called OPEX, the strategic investments to run the business, primarily in research and development to maintain their technological edge. Diving deeper into COGS, the chart clearly shows that the vast majority of this expense is wafer fabrication. This is the payment to foundries for the complex and costly process of silicon fabrication. Other significant costs include assembly and the procurement of critical components like high bandwidth memory, HBM. Now let's look at OPEX. This is where Nvidia builds its competitive moat. As you can see, research and development, or R&D, dwarfs all other operational spending. This aggressive investment is non-negotiable for leadership and is spent on talent, expensive design software, and prototyping new chips. There are three key takeaways from this cost structure. 1. R&D is the core investment. 2. The fabless model converts massive capital expenditures into more predictable operating costs. And 3. High profit fuels innovation, providing the cash needed to fund their industry-leading R&D. And those profits are substantial. This slide shows the staggering results from the first quarter of fiscal year 2025, a total revenue of over $26 billion, representing a 461% year-over-year growth. You can see the driver. The data center segment accounted for $22.56 billion, or nearly 87% of that total revenue. This level of success does not go unchallenged. Nvidia faces a multi-front battle against established rivals, innovative startups, and even its own largest customers. In its foundational market, gaming, Nvidia has historically held a commanding lead. However, the battle for gamer loyalty is a constant two-front war against its primary rivals. In the discrete GPU market, Nvidia's main rivals challenge it across all segments. AMD focuses on price to performance, particularly in the mid-range. Intel, as a newer entrant, leverages its vast resources to establish a third option, primarily targeting mainstream and entry-level price points. But the most critical and profitable battle is in the data center. The insatiable demand for AI compute has attracted a diverse array of competitors. On one side, you have established chip makers like AMD and Intel who are leveraging their own silicon expertise. On the other side, you have the hyperscaler dilemma. Nvidia's biggest customers, Google, Amazon, Microsoft, and Meta, are all designing their own in-house AI chips to reduce costs and lessen their dependency on a single supplier. Finally, there are the emerging threats. A new wave of well-funded startups like Cerebras, Samba Nova, and Grok are challenging the GPU's dominance by creating novel chip architectures specifically designed for modern AI models. Even in the automotive frontier, they face stiff competition from companies like Qualcomm and Intel. In summary, Nvidia is fighting a three-front war: direct rivals like AMD, its own major customers, the hyperscalers, and highly specialized startups. Despite this competition, Nvidia's performance has been era-defining. For the full fiscal year 2024, the company posted $60.9 billion in revenue, a 126% increase. Net income grew a staggering 581% to nearly $30 billion. And the driver, once again, was data center revenue, which grew 217%. This bar chart for the full year shows that 78% of all revenue came from the data center. As CEO Jensen Huang stated, accelerated computing and generative AI have hit the tipping point. This growth was primarily driven by the Nvidia Hopper GPU computing platform, highlighting the massive shift toward AI infrastructure. But as we've seen, this dominance is not guaranteed. Looking ahead, Nvidia faces significant hurdles to maintain its lead.
First, intense competition from rivals and customers developing their own chips. Second, supply chain reliance. The fabless model is also a vulnerability. Nvidia relies entirely on third-party foundries like TSMC, which creates vulnerability to capacity constraints and geopolitical risks. Third, regulatory and trade scrutiny, as export controls on advanced AI chips can limit access to key markets. Fourth, market volatility. Significant revenue is still tied to cyclical markets like gaming, and, as we've seen, demand from crypto mining can evaporate overnight. Fifth, sustaining innovation. Staying at the cutting edge requires massive, continuous R&D investment. And finally, the software ecosystem. That strong moat is under attack as competitors are heavily backing open-source alternatives in an attempt to break this powerful vendor lock-in. So, we've traced the remarkable journey of Nvidia from a 1993 bet on 3D graphics to becoming the single most critical company powering the AI revolution. We've seen how their visionary bet on CUDA transformed them from a hardware company into a full-stack computing giant, creating a powerful software moat. We've examined their key pillars, their push and pull strategy, and their financial engine. But we've also seen the significant challenges ahead: intense competition from all sides, supply chain dependencies, and the constant pressure to innovate. NVIDIA's story is a case study in strategic pivots, long-term vision, and the power of building an ecosystem. They didn't just build faster chips, they gave the world a new way to compute. The question now is whether they can maintain that dominance as the AI revolution, which they helped start, continues to accelerate. Thank you.